So as we're approaching the end of 2022, I want to wish you all a very happy new year. I hope 2023 is better year for you and your family in terms of your portfolio, in terms of your health, in terms of everything that's very important to you. I hope this is a better year in general. And the way I think about the new year and me going into a new year, I look at what I did in 2022, what I did right, what I did wrong, and what can I learn from those mistakes so I don't repeat the same mistakes in 2023. So I decided to do this video and talk about my best trades that I did in 2022 and also my worst trades where I really messed up and really lost a lot of money in those trades. So maybe you can actually learn from my success and you can learn from my failure. And this is, my gift for you on this new year, so you can actually save some money and learn from what I did wrong instead of you making the same exact mistake whenever you're doing those things and you losing money. So I lost the money, I made the mistake, I was wrong in a lot of things, I was also right in a lot of things, and I hope you really learn something in today's video. And again, I hope you enjoy it. And today is Tuesday. We have 3 more days to finish the 2022 week, and my year-to-date performance is around 27%. Now you may say this is an amazing number because the S&P is down. Yes, but the real rate of inflation is more around 15%, not 9% in my opinion. So if we take 15% off and we measure the portfolio performance in real terms, I am only up around 12% for 2022. Although it's a good thing that I was able to be positive on the year, and this is mainly because I went into 2022 prepared. And this is what I talk about in my videos. I didn't start talking about the crash after it crashed. I started talking about the crash before it crashed. You can go back, review my videos. I stayed away from Tesla. I sold a lot of the growth stocks that I actually had from 2020 to 2021. I rotated into value stocks. I put on ARK Innovation, and I did a lot of trades that really helped me be positioned going into 2022. And this is the difference that I believe is between myself and other investors, that other investors, they do those things on YouTube just to get views and collect the ad revenue. But what I'm doing in my YouTube channel, I'm talking about what I'm doing in my portfolio. I'm not just talking about it, but I'm actually doing it. And if you'd like to verify all the information that I'm going to talk about today, you can join my Patreon. I believe the price is very, very cheap for the kind of knowledge that you can actually learn in this Patreon. And this is the main reason I created it. Many people ask me to do a course and teach people how to value stocks or how to trade options or how to do this. Now, I've never been a big fan of courses, mainly because a lot of people can just read a book and make a course about it and claim that they actually know something. But in my group, I am doing everything 24 hours. I am in the group all the time. Every time I place a trade, everything is timestamped, and people can learn from my mistakes whenever I'm doing them and ask me, why did you do this? Why did you do that? And we're gonna go through those timestamped trades today, the good ones and the bad ones. So again, I hope you enjoy this video. Now, one of my best gainers and one of my biggest mistake in this year of 2022 was actually TPL, Texas Pacific Lands. And again, I have a video when I made a video talking about the best oil stock to buy that no one is talking about. I was buying TPL when all the oil stocks were going up. Exxon was going up, Chevron was going up, and TPL was going down. And TPL is a royalty company, meaning Exxon and Chevron, they drill oil on TPL's land and they pay TPL royalties. TPL doesn't have to put any capex or anything crazy, and the TPL gets that money and pay some expenses, and then they reinvest it in the business. They buy back stock, they buy more land, and they are really amazing compounders over years and years, those type of royalty companies. Also, you have Franco-Nevada in the gold mining sectors and a couple of other things. So it's an amazing business model, and I was able to buy it around $1,000 per share. Now, a couple of months later, I sold it around $1,500 per share, and I made around 50% return in between January and pretty much May. I sold around $1,500. So 50% return in a couple of months. I was happy with this return and I took it. And what happened after? The stock made a massive move. And if I actually held those shares, I would be up more than 150%. alone in 2022 just from this investment. But I actually sold it, although I made 50% return. I actually lost much more than I could have made if I just held those shares. Now, the lesson here, why did I sell them? Why didn't I just hold those shares? And the main reason I sold it is I treated TPL like I treat a cigar butt type of stock. Like whenever I buy GEO or whenever I buy some type of a dying company, there's a cigar butt with one more puff. I try to, squeeze it out and then sell it, and then it goes back down and maybe I buy in. So I didn't really buy TPL like I was buying a growing company, a compounder type of company. And what I learned from my mistake is whenever I find something that's growing, a high quality business with high return on invested capital like TPL, I buy it and I pretty much never sell it, or I hold it for a very long time, because a cigar butt is not growing. But with time, TPL and other compounders type of stocks, they are actually growing and they are providing more value to shareholders. So I should have kept TPL and I sold it, and I made a big mistake. But guess what? I stumbled on another type of royalty company, which is also a big compounder, but this one I am not selling it. I actually bought it at a very fair price in my opinion, and I'm going to be holding it as I learned from my mistake with TPL. But that was one of my best trades. Another one of my best trades was actually GEO. Again, you could go back and watch my video. I made a video on GEO and why I'm buying this Michael Burry stock. It was around $5.50 per share. And I was in and out of the stock. I bought at 5, then I sold around $8.50, then I bought at 6 and sold around $7.50, and I've been in and out of this stock. But I don't own this stock anymore. But in total, I made at least 20 to 30% on every single trade, buying it at $5.50, selling at 8, and then buying at 6 and selling at 7. And I did many trades on GEO, and this is another one that I talked about. CoreCivic, I still own CoreCivic, although I did sell some shares when it went to the peak. Again, you can go back and watch my video. I was talking about CoreCivic when it was around $10 per share. And after I talked about it, went from $10 per share to $8.50 per share. And I was accumulating heavy as it was going down, and I lowered my cost basis to around $9.50 per share. And it actually then rewarded me, and it made a massive move, and I was up over 35% on CoreCivic in pretty much 4 to 5 months, which is really an amazing return. And I did take some profits around the $13 level, and then I took a little bit more around here, but I still have a position in the stock, but I just sold because I found a better value in the market. So I try to sell those stocks and move them. This is the type of stocks you can buy and sell, because it's not really a growing company. But something like TPL with high return on invested capital, you buy those stocks and you don't really try to time them, you just hold them. And this is the mistake I made, but again, I learned from it. Now, what I'm trying to show you with my video today is you don't really need to care what the Fed is talking about for you to be able to generate any returns. There were many stocks that were actually very high performers in my portfolio and in other people's portfolio, and there were stocks that were making 52 weeks highs, especially the oil stocks, despite what the Fed is doing, which is why I keep doing those analysis videos on YouTube and try to share as much information as I can. As yes, we can pay attention to the Fed and the doom and gloom and the 2008 financial crisis or whatever, we can talk about that stuff, but what really matters is picking the right stocks, because the right stocks are going to perform no matter what the Fed does or no matter where inflation is. And one of those stocks is actually Crocs. And many of you bought the stock, and many of the people that joined my Patreon were actually owners of Crocs due to my video, and I started talking about this when it hit around $54 to $55 per share. The stock was going down because they were acquiring another company called Hey Dude. Many of you know the Hey Dude shoes, as they are very popular, and there was a lot of uncertainty around this business. And after the uncertainty was gone and Crocs demonstrated that they can actually monetize Hey Dude brand much better than in what it had before, the stock more than doubled from around $48 to $50. It went to $106 per share. This is more than 100% return in less than 6 months with a company like Crocs, while the Fed is talking whatever they want to do, and whenever everyone is panicking, you still have some stocks that were actually making a lot of money, and they were actually correcting due to high uncertainty type of situation. And those were one of the best stocks that I actually had in my portfolio. Now, I didn't only look at buying buying stocks. I was looking into some arbitrage or some type of opportunities where I can actually make some type of returns with something that's misunderstood or with something that's actually, repeating itself. And I was able to exploit those opportunities in the portfolio. Now, something else I did in the group, and we actually did with other people that are in my Patreon group, we were actually selling put options on Occidental Petroleum. And whenever Occidental hits around $61 to $60 per share, we sell the 55, 52.50 or 55.50 put spread, and we actually collect around the 8 to 10% premium for holding this put spread for around 1 month. And we did that for 3 or 4 months, and we made around 40 to 50% gain in total just selling those put spreads on Oxy. Now, the key is, why are we selling it at $55 per share? This is because since Warren Buffett signed the letter of intent to actually acquire 50% of Occidental Petroleum, and he was buying in around $55 to $57 per share. So the stock found a floor, as you can see here in the yellow line, around 55 to 57, because every time it got to this level, Warren Buffett would buy more Occidental and then the stock would go up. Then it gets down close to this level, then Buffett would buy more Occidental. So we're actually using Warren Buffett to generate some income for the portfolio by selling puts below $55 per share, and we pretty much never got assigned on those puts, and we did make a lot of gains. Now, I'm sharing this trade with you here, but I'm not sure for how long this will keep working, but it has been working amazingly well since June, and I'm gonna continue, doing it until, it stops working. But now it's still working, so I'm likely going to continue doing this trade in the portfolio. But this was one of the trades that I was able to make to kind of exploit some opportunities that I'm seeing in the market. Now, something else that I was able to do in the market was around the VIX itself. And this is how I timestamp my trades in my Discord group. Whenever I, say something, I say I bought this call option, and when I sell it, I say I sold this call option. And again, if you think this is all lies and fuzziness, you can just join and talk to many people who are actually in the group when I started it in February, and they can actually tell you that all of those things were true, as they were actually tracking those put options, and many of them actually copied those put options and call options and actually got the same results I got. So it's all 100% transparency, and there's no lies in anything that I'm doing over there, and you could ask them if you want. But if you look at what I did here, I was trading UVXY, which is, the ETF for the VIX. It's not really correlated with the VIX much, but it used to be before, at least when I was doing it. And I found a very interesting pattern with the VIX. Whenever the VIX would go below 20, I would buy the UVXY, as I believe it's gonna go up. So it went 20, then it touched 25. Every time it touches 25, it starts going down, and then it hits 20. So all I did with those UVXY calls, I bought calls at 20 and I sold them at 25. And I have done that for months and months and months and months. And I made massive gains, 140% gain, 146% gain, 41% gain, 32% gains. Those were all gains, pretty much all aligned, like one after the other, one after the other. I will pretty much never get the same opportunity I got, because after I made those trades, the VIX started acting weird, if you can recall, and it really diverged from the market, and it got really manipulated. I'm not even smart enough to understand how it's been so manipulated. I know it's something with the zero day to expire call options and put options, but it has a lot to do with it, with market makers and a couple of other things. So what I'm trying to say is that the VIX has diverged from this pattern of 20 to 25 and 25 to 20. So I stopped doing those trades, but I was able to actually make pretty good gains doing this trade. Now you may say, yes, but Warren Buffett would not do that, or Cassie Wood would not do that. But I'm not Warren Buffett and I'm not Cassie Wood. Well, my goal was in the portfolio to actually do whatever it takes to try to generate returns for the portfolio and at least hedge my long-term positions. So whenever those positions are going down, I have something else that's going up, and it's actually at least giving me break even on those type of positions. And because I do more shorted dated type of options, not longer dated options, those options actually exploded much higher and provided me with gains instead of just ending up break even. Now, something else that I was doing when the market was actually TBT, meaning I was short bonds as I knew inflation was high and it would stay very, very high, and the Fed is raising rates. So I was in and out of TBT, and I made pretty good gains, 114%, 40%, 96% gains on those shorted dated type of options. But the worst part about TBT is I was shorting bonds between January and around July. And I thought that the trade was over, but then TBT made a massive move as the yields exploded above 4%. Now, I personally didn't see this coming, so I got out of this trade. But if I actually stayed into TBT, I would have made massive gains. But again, I had the wrong timing. I had the right timing over here, then I sold right before, it made the huge move on TBT, and I missed out on a lot of gains. But I'm actually, satisfied with my performance overall in this whole thing. But again, I also had some losses, and now I want to talk about the losses. And most of you are familiar with this company, as I talked about it many times, and it's one of my worst performers, for the year. And without Warner Brothers Discovery, I would actually been up maybe 38% on the year. But this really hurts me a lot in the performance, and it's, Warner Brothers Discovery stock. And I lost around 28% on my total cost basis after me averaging down many times on Warner Brothers Discovery, and I sold it around $11 per share. Many of you know my video. I decided to take a loss, and after I actually sold it, it went down another 20%. So I would have, if I just held Warner Brothers Discovery, I would be down, around 40 to 50%, at least 50% minimum on my cost basis. All right. Now, why did I decide to sell Warner Brothers Discovery, and what really went wrong? And this was me violating my own rule of actually not buying a company if the macro environment is not the right environment for this type of company. So then I was looking at Warner Brothers Discovery. I said maybe it's cheap enough to compensate for the risk. And then the management made some mistakes, and I saw the macro environment getting worse, but I kept telling myself that everything is fine. I should just buy the dip and dollar cost average down. I am guilty of that too. And it does happen to me, not often, but from time to time. And I was just listening for confirmation bias around Warner Brothers Discovery, telling myself everything is fine. And then I lost around 28% on Warner Brothers Discovery. But the main takeaway that I want you to take from this whole thing is don't just go and buy the dip whenever a stock goes down. Sometimes it makes sense to actually sell the dip if you reevaluate the position. And I should have done that whenever Warner Brothers was around $13 to $14. But I didn't actually do it, as I was telling myself that everything is fine and I'm just going to hold on Warner Brothers Discovery. I'm not going to accept that I made the loss, so I can just, recover and then at least get back to break even. But then I changed my mind around the $11 per share after I sold and went down over 20%, and actually got some benefits on tax loss harvesting by selling it. So again, I corrected my mistake because I believe 2023 is going to be a much worse year than 2022. So why would I keep telling myself that everything is fine even though everything is not fine? And that was one of my biggest mistakes for the year, and I did lose a lot of money on Warner Brothers Discovery, and I also had a very large position in it, which actually really hurt my portfolio. But again, I did not let this put me down. I sold the position and I looked for other opportunities where I actually made back what I lost on Warner Brothers Discovery. So I just moved on from the investment, I moved on from the company, and I'm just looking at other opportunities, and I'm successfully doing it so. Now, one of my biggest actual losses other than Warner Brothers Discovery, and this is in the options market, and I'm actually really like to trade options, mainly buy them. I don't really sell them a lot, and I was short Affirm in the second quarter. Now, the story about this is very funny. In the first quarter of 2022, I was shorting a lot of stocks on earnings, and I was making 50%, 100%, 200%, 300%. I made a lot of gains, shorting stocks on earnings, a lot of retail type of stocks, a lot of tech stocks, a lot of Cassie Wood type of stocks, and we made massive gains in Q1. And I got a little bit too hot, a little bit too, confident, and I said I'm going to do the same thing in Q2. So I started shorting many companies. I cut some losses. Normally that's what I do with options. I don't keep buying the option. I just, if it hits 15-20%, I just cut the loss and then I move on and try to find another stock to short or take advantage of the opportunity. But this is what I did with Affirm. After I bought Affirm, I added 20%. Then I doubled those Affirm puts, and it was around 3% of my portfolio, which is actually a big position for options. Normally I do them 1 to 2% maximum of my portfolio. So my mistake was, as Affirm was going up in the summer rallies that we're having, instead of me cutting losses, I was actually adding to it. I even doubled my position, and I ended up losing around 27%, as you can see here on Affirm. And I was actually too early into this whole thing, as whenever you're doing options, you not only want to be right on the reason, but you also have to be right on the timing. And if your timing is wrong, you're going to lose. And being wrong on the timing is actually just being wrong in general whenever you're actually trading options. And a lot of people actually join the Discord to learn how to trade options, and they see me doing everything live, and they actually learn from what I'm doing in the same exact second, instead of them just going to watch a course on how to trade options, while the person that's doing the course has no track record of being profitable doing any type of option strategy or anything around position sizing with options. But this is what I did with Affirm. I lost 27%, but this is me after doubling down. Before I doubled down, I lost like 50 or 60%, which was really a big loss on Affirm. But again, that was in the second or third quarter of 2022, and I did not let this put me down. I walked out from the loss and I continued doing trades. As you saw in the other one, I continued finding gainers like CoreCivic and other type of stocks that I ended up buying. So I did not let this just let me down. I moved away from it. I said, okay, that's it. Now I'm going to focus on the next opportunity. And this is really what helped me be positive on the year in 2022. Now I'm going to talk about what I'm trying to do going into 2023. And this will really be very different from what I tried to do in 2022. In 2022, I was basically trying to stay alive. I was doing everything I can to try to make the best returns I can make, short-term trades, option trades, everything that I can do, I did whatever it takes. Now 2023, I might not be actually doing that too much. I will be doing some options and shorting some stocks and stuff like that whenever the time is right. But I will mostly be looking into building the portfolio all in 2023, as I believe it will be one of the best buying opportunities of pretty much the last 10 to 20 years. In my opinion, even some stocks right now are looking like amazing buying opportunities. But there are three types of assets that I want to buy in 2023. And the first one of them is buy growing compounders at a cheap price. I have a very big watch list of actual compounders that I'm watching. One of them is HSPGI, which is S&P Global. And you could tell, high return on invested capital, company that's growing, but I want it at a dirt cheap price. And if I can't get it, I'm not really going to buy it. But I'm trying to buy into growing companies so I can hold them after we recover. As if I put all my portfolio in trying to buy whatever is just beaten down and then sell it when the market goes up, then what am I going to buy? Buy everything that already went up whenever the market is expensive. I want to buy something that's growing and hold it for at least 5, 10, 15 years. So I stopped really doing those type of short-term trades, as it's not really my style, but I was willing to do whatever it takes to generate returns in 2022. Something else I want to buy, which is more, again, on the shorter term, is buying cyclical stocks as they are beaten down the most. Stocks like semiconductors, I talked about Micron. The copper stocks, they rallied recently on the whole China reopening, although I believe it's not sustainable. I think those stocks are going to go back down. A lot of the oil and gas type of companies, the car dealerships, as people are bearish on CarMax and a couple of other ones, and a lot of the housing stocks, maybe Home Depot, although I was short Home Depot many times in 2022. I may actually buy the stock, even maybe Lowe's or a couple of other housing stocks in 2023 as a bet on a recovery in 2024 and beyond. Something else I'm looking to buy, and this is, again, I got the most criticism on that, and this is buying growth stocks. I might actually be buying the growth stock ETF, as I'm not personally sure on which exact company to buy, as many of them can go to zero in 2023. They are diluting shareholders, they have very bad balance sheet, and I'm not sure which one is going to be the winner, which one is going to be the loser. I'm still trying to do my best to find those type of stocks, and I will share them in the Patreon whenever I find them. But I'm mostly, thinking about just buying a growth stocks ETF, as I believe those type of growth stocks are eventually going to come back. I just don't know when. Could be in 2024, could be in 2025, could be in 2026. But whenever they do come back, they're going to come back in a major way, and the new cycle is going to start again again, people are going to call Michael Burry a boomer. They're going to call Warren Buffett a boomer. They're going to say value investing is dead. This is how it's been every single time. Whenever the growth stocks start going up and then the boring value companies barely catch to those growth stocks, they pretty much do nothing. People get excited and they buy whatever is going up. They sell whatever is going down. And now what I'm going to be doing in 2023 is buying what people hate and selling what people love, and then do the same thing over and over again. So this was my last video for 2022. I want to thank you all for this amazing year. Thank you for being a loyal viewer and subscriber, and I hope you enjoyed this video. If you did, maybe consider joining the Patreon or press the like button. I would be very happy for that, and I hope to see you in another video.